Alright, guys, so we are back in the Twilight Zone. Now, Trump is at the G7 and he just reminded everyone how much investment money is supposedly flowing into the United States.
No country in history has had that kind of investment. We'll be having almost 19.1, 19.2 trillion dollars invested in the United States. The record was 10 years ago from another country when it was hot. But we have the hottest country in the world right now. But Qatar's been a great investor.
Now, apparently, Qatar is going to invest $1 trillion in the US alone, and the total investment commitments announced exceed $19.2 trillion. That's more than half of the entire US GDP, apparently flowing in from other countries. Now, something tells me Trump really wants the markets to soar higher. He's on a mission to pump the US bubble. But here's the real question. Is this even a genuine win if the US becomes a K-shaped economy where Wall Street celebrates while Main Street simply collapses? Now, the true picture of the US economy now is not pretty, not even close. The Pentagon admitted in May that the Iran war cost the government at least $29 billion. The real number today is much higher, and every dollar of that war cost gets financed through deficits, which means it goes straight into the national debt. Meanwhile, ordinary American households they are being hammered. According to the Brown-Watson School, US consumers have suffered a $59 billion hit to their collective standard of living. Gasoline prices are still 35% above pre-war levels, diesel costs 40% more, and that translates to a $450 burden per household that isn't going to go away. And even if Hormuz reopens completely tomorrow, it takes weeks or maybe even months for oil supply to normalize globally. Inflation doesn't disappear the moment the strait opens. It lingers on in prices, in supply chains, and in business cost structures long after the physical disruption ends. Now, the trade data makes the picture even darker. Import prices are up 6.7% year over year in May. Food and electronics, they're all costing more. But export prices are up 11.2% as well. And that means US goods are becoming too expensive for foreign buyers to afford. US exports could truly hit a wall where global demand simply dries up because American products are priced out of reach. Economists globally are now forecasting the Fed will have to hike rates by year end. They are projecting that core inflation won't fall below the Fed's 2% target until 2028, and that means years more of elevated rates, years more of expensive borrowing, years more of financial pressure on every corner of the US economy. Now, Trump understands all of this, and that's why he's at the G7 announcing trillions in investment pledges. He needs the narrative to stay positive, because if confidence breaks, everything else is going to break with it.
We're doing better than we've ever done as a country. Stock market's the highest. Everything's the highest. 401ks are the highest they've ever been by 25%. And we're doing really well. And now you're going to see prices coming down. You know, when I took over,
The US stock market is essentially the only remaining bright spot in the entire US picture. Bonds are in trouble, the dollar is weakening, consumer confidence is collapsing. So stocks are the last pillar, the last bastion holding the story together. But even stocks today are dangerously overpriced right now. Over 60% of economists are predicting a 20% correction in US stocks has really become a genuine probability. And the war damage is done. Inflation is sticky, and if the Fed does hike, the AI bubble is going to deflate rapidly. Now, if you're Trump, a stock market crash is an absolute disaster. It would crack the entire investment thesis for the United States overnight. Falling stocks means falling dollar demand. Falling dollar demand means a weaker dollar. A weaker dollar just means higher inflation. So this spiral is vicious and is self-reinforcing. And that's why Trump is on a relentless PR tour even during the G7 summit, hyping investment numbers, announcing phantom pledges, keeping the narrative of US strength alive by any means necessary. But the structural buyers of US assets are quietly walking away. And a new major report just confirmed what we have been tracking for months. Central banks are done with US Treasuries as their primary reserve asset. Central banks globally are planning to buy more gold this year, especially now that gold has pulled back below $4,500 an ounce. This is the perfect accumulation window for sovereign wealth managers, central banks, who are all looking to move away from dollar assets. Now, every dollar a central bank puts into gold is a dollar not going into US bonds, and that makes it harder for Besson to fund the deficit, harder to finance the 1.5 trillion military expansion, harder to keep bond yields from spiraling out of control. The trend has been building since 2020. When the US printed massive amounts of money during COVID lockdowns, central banks started quietly accumulating gold. Then came the Ukraine war and the Russian asset confiscation. Then the trade war, and now the Iran war. Let's not forget the seizure of Iranian crypto. Over 40% of central banks globally now want to increase their gold holdings. Only 1% are looking to sell. The direction of the travel couldn't be clearer. And a big shout out to our sponsor today, Indigo Precious Metals. When it comes to buying gold and silver, I trust Indigo Precious Metals in Singapore. They have made investing in precious metals safe, fast, easy, and simple for both small and large scale buying. I've been stacking gold for over a decade now, and I've learned two things when buying. You want to buy authentic gold bullion, and you want to buy it at the lowest premium possible to stretch your dollars even further. And I'm glad to say I found both of this at Indigo Precious Metals. Indigo Precious Metals is a leading retailer in Singapore. They specialize in physical gold, silver, and platinum. They are my one-stop shop when it comes to buying bullion. Their prices are sharp, and they have the best brands on sale, and I can test the gold on the spot. So if you're looking to make your first gold purchase, Indigo Precious Metals is the best place to start. Whether it's 1 ounce or 1 kilo, this is the reputable dealer you are looking for. So take action today. Click on the link below and enjoy a discount on your first purchase with the code SEANFOO. Start your gold stacking journey today. And maybe this all stems from what Scott Besson just said a few months ago. Now, Besson's repeated demonstration of US sanctions power have reminded every country in the world about counterparty risk.
They've been very good partners. I believe that we have seized about $1 billion of their crypto, and
just outright seized it.
Just outright grab the wallets. Some of them may be like typing in right now and realize they might not have realized that their wallet had been grabbed. And we are working with our allies all over Europe to grab villas and houses and properties.
And Asia is now making its biggest move yet to capture global gold market share from the West. Hong Kong is just weeks away from launching their brand new gold clearing system. Now, this is not a minor development, it has the potential to shift enormous pricing power away from London and New York towards the East. Now, China wants true physical price discovery for gold. They want the world's gold stored within their ecosystem, in China itself rather than in Western vaults. And more importantly, they want all gold transactions settled in the Chinese yuan, the RMB, and not dollars. Now, the Hong Kong system is going to offer unallocated accounts. Investors hold claims on a centralized pool of gold rather than needing to take specific delivery of specific bars. And it makes the system highly liquid, highly scalable, and accessible to a wider range of global investors. And Hong Kong imposes zero VAT and zero capital gains tax on investment grade gold transactions. So that's very important for investors as well. That is an enormous financial incentive to route your gold business through Hong Kong rather than route it through London. And China isn't the only one moving. Singapore is also launching its own gold clearing system this year. And if the world is dumping treasuries for gold, Singapore wants to stand right in the center of that flow and capture the business. It's time to make money. Now, Singapore also has no capital gains tax on gold. They are actively marketing themselves as a neutral and trustworthy hub for global wealth storage. And the Singapore Central Bank is taking an enormous step, even more aggressive one. They plan to offer official gold vaulting services for other countries' central banks. Now, this is a direct challenge to the Bank of England and the Federal Reserve when it comes to gold custody. Countries that previously stored their gold in London or New York may start moving those reserves to Singapore instead. the physical gold flows from west to east would accelerate dramatically. Now we are now moving towards a world with three competing bullion systems. One Western system centered on London and the COMEX, one Chinese system centered in Hong Kong, and one neutral system centered in Singapore. London's current dominance of global gold trading volumes is about to face the most serious competitive challenge in modern history. As physical gold moves east and price discovery becomes more driven by physical markets rather than paper futures contracts, the true market price of gold is going to emerge more clearly. Guys, this is coming. That's very bullish for gold and very bearish for anyone trying to suppress gold prices through paper market mechanics. So all the big boys trying to paper short silver, trying to paper short gold, they're going to be in for big surprise down the road. Now, while gold moves east seeking real price discovery, the US is producing the exact opposite in its own markets. In less than 3 trading days, SpaceX has overtaken both Microsoft and Amazon to become the fourth largest public company in the entire world. SpaceX is now worth nearly $3 trillion. A company that lost nearly $5 billion last year is now bigger than Microsoft by market cap. And this defies every conventional measure of fundamental valuation. It is just insane. And let's put the revenue numbers aside by side so this lands properly. Now, SpaceX brought in less than 19 billion in revenue last year. Microsoft generated over 280 billion and Amazon is well above 700 billion. SpaceX is worth more than either of them despite a small fraction of their revenue and no meaningful profits. This is either the beginning of a completely new paradigm for space-based technology, or this is the most spectacular bubble symptom in the modern stock market history. Now, Elon is doing everything he can to justify the valuation through storytelling, and he's teasing what SpaceX could build and buy with the $85 billion raised. 20 billion was spent for Starlink expansion, 15 billion for the Starship mega rocket program, and the rest for whatever ambitious project comes next. So what can he do with 85 billion? Well, he probably can do a lot. But here's the structural reality that every retail investor needs to understand. Only 5% of SpaceX shares are currently available to the public. The other 95% is locked up with investors, executives, and early investors. And that tiny float means enormous amounts of money are chasing a very, very small amount of available stock. And that's what creates this kind of vertical price movement. Now, SpaceX is trading like a meme stock, pure momentum, pure hype, enormous demand from institutional and retail investors, all fighting over this 5% of a massive company. But the lockup expiry in August tells the real story about what comes next. Over 900 million insider shares will unlock just days after the first earnings report, and that is just in a couple of months. That is a wall of supply about to hit a market that's been pricing on artificial scarcity. And when insiders can sell, many of them probably will sell. And corrections in the low float stocks can be violent and extremely fast when they come. Now, SpaceX stock price has reached a level of absurdity that is really difficult to describe. Now, to put the valuation in direct perspective, SpaceX market cap is now larger than the entire annual GDP of Russia, which sits at $2.6 trillion or so. A newly single listed company with no profits is worth more than the entire economic output of the world's largest country by landmass and a commodity giant. This is not rational price discovery. This is speculation and dollar debasement manifesting as stock price infinity. Now, SpaceX is not the cause of the bubble. It is, however, the clearest symptom of it. The top 10 US stocks now collectively exceed $25 trillion in market cap. That's more than China's entire annual GDP of 20 trillion. It's only 6 trillion below total US GDP as well. The concentration of speculative money in a handful of US tech names have never been this extreme or ridiculous in history. So nothing can go wrong, nothing must go wrong, because if it does, the pop will be historic. So one earnings miss, one Fed rate hike, and one Iran deal collapse, any single trigger could start this massive unwind. And when you're this leveraged on narrative and momentum, the downside is as violent as the upside was thrilling. So let me know what you think. Will global central banks keep dumping US Treasuries and accumulate gold instead? And will SpaceX keep flying to the moon on pure momentum? Or will the August Insider Unlock be the moment where gravity finally makes it crash down to Earth? Let me know what you think in the comments below. Stay safe, smash the like button and subscribe as we navigate through these crazy times.